Hello, everybody, and welcome to episode 4 of the Forex Bootcamp. So, we are going to kick off today's episode with the first part of technical analysis. Now, we've been through a bunch of stuff. We've looked at the basics, we've looked at what trading is, we've even had a very big dive into fundamental analysis. And now it's time to really bring the money home. And like I said before, we've got a multi-part series here, and this is going to be the big juicy part of the entire course. So I hope this is what you've been waiting for, guys. So get your pen and papers out, get your sleeves rolled up, and without further ado, let's kick it off. So in today's episode, we are going to look at an introduction to candlestick charts, what they are, how to read them. We're going to look at a few examples just so you guys can get your head around it. And then we are going to look at something very important called wicks and support and resistance. So the first thing that you guys need to understand is how you're going to be reading your price charts. When you go, and I'm pretty sure probably a lot of you have looked at a stock chart or looked at any kind of price chart, but more often than not, it's probably been a line chart. You've probably just seen it on Google, the stock price of Apple, and just seen the graph. But when you get into day trading, you are going to really want to use candlestick charts. And why do you want to use candlestick charts? Well, because they're the most popular and they've been deemed to be the most accurate way to view price charts because they provide you with the most accurate data. It might seem quite confusing, but if you just look at the bottom there, that's an example of what we're going to be looking at. Okay, and I've got a few trading friends, and I've got a few friends who want to get into trading, and they always tell me, "Oh, Joe, it just looks so confusing." And I can understand. It probably looks like a whole lot, but after this session, you're going to really understand that it isn't actually, as scary as you think. And the reason why they're called candlestick charts is because if you take a look at them, they kind of look a little bit like candles. They got some wicks at the top ends and stuff. I mean, they kind of just look like boxes to me, but you get the drift. Right then, so this may be a good time for you guys to, on the side of this video, get up TradingView. Okay, I'm pretty sure a lot of you guys have already looked at TradingView. So if you want, this will really help you. If you just go to the TradingView website and just go onto any chart, make sure it's a candlestick chart, pause the video, fiddle around if you need to. Once you've got a candlestick chart in front of you, then you can take this information and really grasp it. Okay, so with each candle that you see on the chart, every single candle is going to represent a unit of time. And in trading, if you look at the top left-hand corner, you can probably see some symbols looking like 1H, 4H, all the way down to 1 minute. This all represents the unit of time that you're going to look at on the charts. So if you click on 4H, then every single candle is going to represent 4 hours of time. And why is this important? Well, if you're looking at the higher time frames, the daily, the weekly, the monthly, sometimes even the 4 hour, you are going to be gauging the larger picture, the big trend, the overall trend where price is going long term. Whereas when you go to the smaller time frames, you're just going to see those small short term moves. So you'll be able to, what might just be one big candle on the 4 hour will literally just look like a trend on the 5 minute time frame, for example. But it's all the same information though. Okay, it's just when you go to the higher time frames, all that little information is just condensed into candles. Okay, and yeah, so on your charts you can select different time frames. Yeah, so that's what you'll be learning how to do. And yeah, just to finish off, whatever time frame you choose, each candle is going to represent a price movement in that unit of time. So just to refresh, if we look at the 1 hour, every candle that you see on your chart, big or small, is going to represent 1 hour of price movement. Okay then, so let's look at the candles individually, right? The big chunky bit in the middle is what's called the body of the candle. The body of the candle can range in different shapes and, well, not different shapes, but it can just range in different sizes. Sometimes there's like literally no body, and sometimes the body is huge. Sometimes the body is, kind of middle sized. Sometimes there's a long wick at either end. Sometimes there's a long wick at either end. Sometimes there's no wicks at either end. But the point that you guys need to understand is that the middle bit, that's green and red, is what is called the body of the candle. Okay, and now going back to our illustration well, back to our definition where every single candle is a unit of time, I want you guys to just assume that we're looking at the 1 hour time frame. So each of these candles represents 1 hour, okay? A red candle basically means that in that hour, price had fallen by a certain amount, and a green candle means that price had risen by a certain amount. So let's take the red example, okay? When you can see where it says the open and the close, and you can see they're at opposite ends for each of the candles. Let's say we're looking at 12 p.m., okay, and price had fallen in that time period. Can you see on the red candle where the open is? This would be where price started at 12 p.m., okay, and the close is at 12:59 or 1 p.m., pretty much where the candle ended, okay. So GBP USD could have been at 1.26, right, at 12 p.m. and then it fallen to 1.23 at 12 p.m. Therefore, the candle has shown you in that time period that the price has dropped. Okay, and now let's say we're at 1 p.m. again, okay, and price has risen back to 1.26. Then on the green candle, we can see, right, that price opened there and it rose up a little bit and then it closed at 2 p.m. to 1.26. Does that make sense? That's pretty much all it is, guys. And the wicks are very important as well because these show you where price had traveled to, but it didn't close there. Okay? The opens are always going to be the same. So if you take this diagram and you go ahead and look at the candles, you will be able to see exactly what I'm talking about. And don't worry, guys, I got some video examples for you guys to watch after this, so it really gets ingrained in your head. But what you need to understand with the wicks is that price had traveled to, in and around that, price had traveled to those levels, but they didn't close there. Okay, so if we look at the 12 p.m. example with the red candle on the left hand side, we opened at 12 p.m., which was denoted by where I've written the word open. And let's say as soon as the candle opened, it pushed up a little bit, but then it came all the way down. And as it was getting closer and closer to 1 p.m., it pushed all the way down there, right at the bottom of that bottom wick. Okay, and then it slightly rose up, and then boom, 1 p.m. happened, the candle closes. The exact opposite scenario is true with the green candle. Let's say we open now at 1 p.m. Price had traveled down a little bit, but then it shot all the way up, okay? And it shot up, but then as it got down to 2 p.m. almost, it slightly reversed downwards and then it closed right at 2 p.m. So those are where price, that shows you where price had traveled to, okay? But it didn't close there or open there. Okay. Let's go ahead and take a look at this video example. Alright guys, let's look at a real life example and just solidify all that information that I've told you about. So as we can see here, this is a live graph, okay? This is a live chart of the Australian dollar against the US dollar. This website is what I've been telling you guys to use, TradingView. I'm not going to give you a tutorial on how to use it. This is just for illustrative purposes, just to get you understanding the definition of candlesticks that I just told you about. So, as we can see, we've got a chart full of red candles and green candles. The green candles are signifying that price is rising, and the red candles are signifying that price is falling. At the top by here, these are the time frames I was talking about. So we've got the 1 minute time frame, which goes all the way up to the monthly time frame. So we'll speak more about time frames in a little moment, but this is just to get you to understand the concept of how to read candlesticks. So I'm going to use this arrow, which is going to signify the candle that I want you to look at. Now, I'm not doing any candles for any reason. The reason why I'm explaining this to you is because if you see my mouse right by here, you can see the crosshair. And if you look to the right by here, this is the price. Okay, you see that number 0.68296? Wherever I move this mouse, you're going to see the price on the right. Okay, so if I'm going to be putting an arrow to a candle, then you know we're talking about this candle, because what I might need to do is, if I hover over the candle by there, you won't be able to see that green wick. Can you see? So if I move to the left, right, I'm not talking about this candle now. I'm just moving the crosshair out the way so you can actually see the wicks and you can see the candle better. So I hope that clears it up. So let's start with this candle by here. Okay, on the hourly time frame. Remember what I said? Every single candle will represent this unit of time, whichever time frame you're looking at. So this candle, you can see at the bottom, right? The time that it says Tuesday, 26th of December, 2023, 0500. That's the time the candle opened, okay? So looking at your diagram, this is the open. Can you see by there? At 5 a.m., price was at 67918. I should say 0.67918. Okay, there was no wick at the bottom, so it just shot all the way up. It moved ever so slightly to the top of that wick, around 68170, and then it closed right by there, okay? And it closed at 6 a.m. Now let's look at another example. Let's choose maybe a bit of a weird one. Let's choose this one here, okay? This candle right by there, this red one. This will probably be better, wouldn't it? There we go. Okay, so we look at the time. We can see the time is 3 p.m. Okay, looking at the diagram, we can see that price opened by here. It managed to push all the way up there, but in that hour space, it pushed all the way down right by here, pushed up a tiny bit and closed there at 4 p.m. at that price. Okay, so do you see the notion, right? Let's just take this off. I'll just show you randomly now. Looking at this candle, we got the open and the close. Why? Because price rose. It's a green candle. Okay, we got the open, we've got the close. We've got the open, we've got the close, we've got the open, and we've got the close. Okay, this would be the exact same if you're on the 4-hour time frame. Okay, remember, this is all the same information. This information by here is the same information as the 4-hour, but it's just, obviously the 4-hour, you're going to get a lot more data, right? You're going to get a lot more data, but let's keep it focused. Sorry to distract you guys. Okay, using the exact same concept, the exact same description, okay? Looking at this candle, right? Hang on a second. Okay, looking at this candle by here, you can't really see it, but it's pointing to the green candle, okay, right by there. So if you look at the bottom, we can see that this price of this candle opened at 10 a.m. It pushed down by here, managed to rise up a little bit by here, and then closed there, right, at 2 p.m. So it's all the same thing, guys. Yeah, by here, opened, closed. By here, open, close. Okay, I hope that makes a lot of sense. Go and have a look yourself, and we're going to talk about why this is important in a later slide. Awesome. Hope you guys enjoyed that. I'm so sorry. I had the sniffles and I was getting some tissue out. I didn't want to disturb it, so pardon me, guys. Oh, that's so disgusting. It's really frustrating that I've got all these allergies. I take the tablets and nothing even works. I'm so sorry for being gross for you guys. I just don't want to have to start the video again. Okay, let's go to the next one. All right, guys, let's look at a real life example and just solidify all that information that I've told you about. We just did that. There we go. Okay then, so now that we've done that, I want you guys to focus on wicks. Okay, so now you guys have got a good understanding about candles and how to read them, essentially. We're now going to talk about wicks. So you can see, if you look at the screen, all of these, what look like candle wicks, okay, are very, very important. And I'm going to clear it all up for you now as to what they are. Okay, people, let's quickly go over wicks then. Remember in that diagram I showed you, at the top and the bottom of the candles, you had these lines, right, called wicks, okay? I just need you to be able to just confidently say that you can see them. It doesn't really take a whole much because it's quite obvious. They are these lines that appear at either end of the candle. Now, they don't always appear. Like you can see, for example, this candle right by here. Let me show you. Hang on a second. Like you can see, there's like no wicks on this candle. And that's okay. Not every single candle, right, is going to have wicks. Just remember, guys, the wick is only showing you where price moved to, but didn't close. And the reason why they're important is because they show they show an area in the market where price had failed to move past. So we'll go into this in a bit more detail, but let's just gather our attention to be able to just confidently say that we can see these wicks. I mean, it's pretty, clear, isn't it, guys? They're all around, literally everywhere. And that's pretty much it. We will speak in more detail about what these mean, but let's just go around the chart, go back, and just so we can kind of solidify this information, and just, it doesn't take a whole bunch to be able to decipher it. I'm sure you guys are looking at the screen now and can point your fingers to see loads of wicks. And that's exactly what I want you to do. Don't be picturing any stories. If you can see some certain patterns that are happening, like I'm sure some of you might be thinking, well, hang on a minute, I'm noticing that, when I see a bunch of wicks together, there usually is some kind of move. And, you'd be correct. And you'd also be correct in thinking, well, sometimes I see one big wick and then there's a move down, but don't worry about all of that. If you don't see anything, then absolutely don't worry about it, because we're going to go into more detail about that. But wicks are super important, guys. Just to reiterate, they are these lines that appear at the end or the tops of candles. They don't always appear, and they come in different shapes and sizes. So as long as we can confirm and confidently say that we can see all these wicks, all by here, all by there, then we're good to go to the next slide. Awesome. Okay, and I just wanted to probably clear up a few things. I think I said at one point in the video where it's at the ends of candles. I'm probably sure you recognize that I made a mistake. It's at either end of the candle, which I probably said, but I didn't want to mislead anybody. They can appear at both ends, they can appear at one end, or they can just not appear at all. Let's go on to the next bit, which is support and resistance. Okay, so now we're going to consolidate everything that we've just spoken about, and I'm going to show you why wicks are so important and how you guys can take this very, very simple concept, which, to be fair, is, in my opinion, the most powerful concept in trading. And I hope you guys understand it very well now, but this is going to probably really, really excite you. Okay, have a look. Okay, guys, we've gone through candlestick charts. You know how to read the candlesticks. You know about the time frames. You know about wicks. We don't need to go into trends and patterns and taking trades just yet, because we're not really there yet. I need you to understand the last concept of this episode, which is probably the most important concept that I would say is in trading, one of them at least, certainly one of the most in technical analysis, and that is support and resistance. Okay? I'm going to write it down here, and guys, this is big note-taking, okay? Resistance equals area which is stopping price from pushing up. Support, area which is stopping price from pushing down. Okay? And how do we find these areas? Well, we simply look at our wicks. Okay? I want you to see resistance as your ceiling. Okay? And I want you to see support as your floor. Now, you're not always going to get a very nice, perfect example as this. Okay? You could see something like this, for example, right? If you wanted to draw this by here, that would work. Okay? We have our resistance. At the top, and we have our support at the bottom. Okay? The exact same thing by here, resistance, support. Okay? How we draw our zones in an accurate way, we'll get onto in a little bit. But I just want you, for now, to be fair, let me take these. I just want you for now to get this notion in your head. If you can see any kind of ceiling and any kind of floor, that is enough. So take a minute to look at this chart.
Pause it if you need to. Make some diagrams or some mental notes. And no matter how big or small or wide the floor is or the ceiling is, it doesn't matter. But just remember, your ceiling, your roof is your resistance, and your support, your floor is your support. Okay? Let's have a look. Price failed to push up by here. Resistance. Price failed to push down by here. Support. Price failed to push up by here. Resistance. Price failed to push down by here. Support. So you can see how important wicks are, guys. You know, they provide you with so much information. If you have multiple wicks, for example, multiple wicks at a certain area in the market, okay, it's telling you price is failing to push past this area. Now, are you going to have situations where you have this floor and ceiling, and price smashes through anyway? Of course. Certain levels are going to get broken. Okay, but we need to understand this concept before we go any further, right? Let's go back, okay? Let's have a look by here. Resistance. Support. Now, guys, I don't care how you draw them, whether you want to do a box or a line, whether you want to class as one wick, no wicks, flipping whatever, it doesn't matter. Anytime you see where price has formed some kind of ceiling or some kind of floor where price is failing to push, it's a resistance and support level. Resistance, resistance, okay? Support, right? Again, don't worry how I'm drawing them, just get a rough idea. Support, support, okay? Resistance. Now, it might be hard for you guys to see this, and I do appreciate that. But this is why now it's more important than ever to be diving in yourself to do your research. You know, go and have a look at some other charts. Let's go and look at New Zealand dollar. Okay? Same thing. Right? Let's have another look. Let's see where, let's just go from left to right. Okay? Let's see where price had failed to push further. Okay, well let's start from here. Price pushed up and dropped down. I can see a level by there. Price had pushed down. Oh, and it bounced up by here. There we go. Price then also stopped to push by here and came down. And when you do an exercise like this, guys, it really helps you see the market properly. A lot of fog was going to get lifted, in the words of ICT. Because when I was looking at trading, man, I didn't even have a clue what I was looking at. You know, and I'm doing the exact same thing that I'm showing you guys, okay? And I'm doing this for you so you have an idea, right? So when you go and practice, you can kind of see what I'm doing in some regard, okay? These are all areas where price is failing to push from, okay? You can see by here, okay? You can see by here, okay? Look at the wicks. There's a floor. You can see like it's a floor. It's literally blocked by there. Okay, you can see a ceiling by here. Price can't push up. Bang, comes down. You can see a big floor by here. Price can't move past. Okay? Price pushes up. Hits a ceiling. Okay? Hits a floor. Pushes up. Hits a small ceiling. Right by here. Okay? Hits a small floor. Right by there. Hits another ceiling. Okay? Bang, goes straight through the house. Okay, clear those lines up. Or maybe I should keep them up if you want to have a look at them. There we go. Okay? So, what some people tend to do is, and I'm not going to be teaching, I'm going to be specifically teaching you how to be plotting these lines. Okay? When you get to the end of this course, I will teach you exactly how to analyze the market. But this course is not for that. This course is if you wanted to get your own learning. Remember, this is to take you from a novice to somebody who could then start to place trades. It's not somebody who's going to be taking the same trades I'm taking. That's for sure. This was, like, its intended purpose was for those who wanted to get their foot in the door and say, do you know what? I can go ahead and do this now. I can go and do my own learning. You know, if you wanted to specifically learn how I traded and specifically be able to analyze the markets and me teach you, you know, there's another course for that, right? So going back to support and resistance, so don't worry too much about how you're drawing them. If you wanted to draw them like this, okay, you can see by here, right? I'm not going to go into talk about these levels, but you can see sometimes that price breaks through and yada, yada, yada. So don't worry too much about these sort of things and trying to find patterns. All I want you guys to go and do is go to a chart. Just try and draw those ceilings. Try and draw those floors. Remember, okay? Let's just look at this by here, okay? Your ceiling is your resistance, okay? And your floor is your support, okay? I guess you could say this. The floor supports me, right? And I can't jump through the ceiling because I'm going to be met with resistance. So that is it on support and resistance, guys. Go and do your own learning, and I'll see you in the next slide.
Awesome. Damn, I was getting a bit surprised with myself. Was I going into salesman mode or salesperson mode trying to get you guys to buy some course? To be fair, I don't even think I haven't even created that course yet. But obviously, guys, you know, we don't need to talk about it now, but if that's something that you wanted, we can definitely look into it. But this is just for you guys to get a nice brief overview. So let's go ahead and recap and not talk about any other courses because I don't care. As long as you guys are getting value from this, that's all I care about. If you guys want something else, then you can definitely come and ask me. I'm so sorry for my allergies. It's been horrible having to bloody hear me. But let's have a recap. So we view our charts in candlestick format. Every candle represents a unit of time that you're viewing. It doesn't matter if you're looking at the 1 minute, 5 minute, or that 1 hour. When you go to these respective charts, you will see the candles representing that unit of time. If you go to the 1 minute, every candle is 1 minute. If you go to the 5 minute, every candle is 5 minutes. Green candles represent price rising. Red candles represent price falling. Candles create wicks of different shapes and sizes, and also the candle bodies, I should mention, come in different sizes too. Wicks, they show you areas in the market where price is failing to push past. And when you find these areas, you can determine whether they are support and resistance levels. Now, let's go back to support and resistance. Resistance is an area where price is failing to push up. This is your ceiling. And support is an area where price is failing to push down. Very, very simple, guys. Gross! All right, then. What are we going to look at next? Okay, now we're going to look at how markets move. We're going to look at why support and resistance is important. We're going to look at how to use support and resistance. And then we're going to look at something called breakouts. So guys, that was really fun for me to do. I hope you guys really enjoyed it. Go ahead and do some, go ahead and do some research now. It's a perfect opportunity before you get into the next video. But thank you so much for watching. Hope you guys learned something and I shall see you in the next episode. Take care.